One thing I learned more so relearned from 2008 was to be cynical. I do not want to live as a cynical person.
Right.
I consider myself to be an optimistic realist. But when looking to buy a stock, I think it's very, very important to wear the cynicism hat. And that will add additional clarity when you make the investment decision.
That's Benj Gallander, and this is the All Things Risk podcast. Welcome and welcome back to the All Things Risk podcast. I'm Ben Catania. I'm your host. This is my show where we use the lenses of risk and uncertainty to understand ourselves and our world a little bit better. Today, I bring you an absolutely wonderful conversation that has a little bit of everything. My guest is Benj Gallander. Benj is one of Canada's most successful contrarian investors, and he started investing way back in the 1970s. And in 1995, with his good friend Ben Stadelmann, he co-founded Contra The Herd, an investment newsletter that has achieved an incredible annualized return of 19.6%. That is absolutely amazing. He is also the best-selling author of 3 books, including The Contrarian Investors 13, How to Earn Superior Returns in the Stock Market. He writes a column in the Globe and Mail, which is Canada's national newspaper. He writes for a number of magazines. He has been a guest several times on Canada's Bloomberg Business News Network. He's a regular speaker at events, and he is on the board of directors of a couple of companies. Now, when I brought Benj onto the show, I thought that this was going to be a conversation about contrarian investing. And of course, that's an interesting topic, but it turned out to be so much more. Benj has a wide array of interests and experiences, and this conversation reflects that. He's also an inherently curious person. And I would argue that those characteristics have contributed to his professional and his personal success. And this diversity and curiosity is a theme that runs throughout. And I think there are huge lessons that we can gather from that, from what Benj brings. And that comes through when he describes his investment philosophy, starting Contra the Herd, when he discusses learning from mistakes, the importance of reading and learning, when he talks about fear, about things that make us uncomfortable, and so much more. I think you're going to thoroughly enjoy this. Here is Benj Gallander. Benj, welcome to the All Things Risk podcast. This is a pleasure and the highlight of my day. Welcome.
Well, thank you, Ben. I would say the same for me. And from the get-go, I'll say I hope I don't cough too much. As you know, I'm getting over COVID, and I seem to be quite a bit better, but I'm certainly not 100%. But having 2 Benjamins on a call, I think it's got to be very positive.
Okay. Yeah. It's easy to forget that we still are in the midst of a pandemic. The world is a strange place.
Well, it's been fascinating the way that news has changed. I mean, you're in London, England. I'm in Toronto, Ontario. For almost 2 years, it seemed like all the news and everything you saw was about COVID. And there were other things, but everything was pushed to the back burner. As you know, newscasts, newspapers, they generally stay the same length. So if all of a sudden COVID, which wasn't around, and then starts taking, let's call it 80% of the coverage, all of these other things get pushed back. And then what happened, let's call it a month ago, with the Russian invasion, COVID here in Canada has gone very much to the back burner. It's still there, but it's fascinating how things can shift that way. And I have no idea how long things will go on in Russia and Ukraine, but at some point they will also be replaced. This is the nature of the world and news flow, and part of it is real change, and part of it is just people kind of get tired of the same things.
Yeah, very true. Very true. And as you say, we'll see. Unfortunately, it changes people's behaviors as well as various we basically have no regulations now in COVID in the UK. You could go out, not wear a mask. You don't even have to isolate if you test positive. It's the consciousness has changed, and it's almost like this thing doesn't exist anymore. But slowly but surely, cases are going up. So,
well, and that's what you'd expect to happen here too. Things have opened up dramatically in the past week or so, depending on which province you lived in or live in. Some of them had opened up earlier. In Ontario, it's really opened up, and of course, cases are going to go up. But measurement of anything, whether it's measurement in stock market returns, measurement on what we achieve in life, measurement of COVID. It's one thing to measure by how many people get it, but it's another thing by how many people get it seriously, by how many people die from it. And I noticed quite a while ago the deaths had leveled out. It got to be 5 million, which is quite a number. And then all of a sudden, it was just how many cases there are out there. But if you're dealing with a far less severe illness, and 2 of us in my household of 4 have had it, actually 3 now, it's a different measurement than who dies and who gets really sick. So we were basically on the couch for a few days. As I mentioned, I'm still coughing, but a lot of people don't look at it in terms of degree. And that's a key factor. And I think people have gotten tired of being masked, and a lot of people just want it gone, plain and simple. And going to stores and restaurants, and I had to have my Q code until about a week ago, and we had the Q codes here for about 6 months. I wondered if they were really necessary from the get-go, but obviously the government disagreed. And the amount of money, the amount of time that was put into those that weren't really used for very long, to me was highly questionable. But fear is tremendous, especially whether it's in the stock market, whether it's in life. And there's been so much fear about all of this. And the comparison, as you know, was to the Spanish flu. And there was no comparison. The number of people who died of the Spanish flu as a percentage of the population was staggering. The number of people who have died from COVID, although it's not a pretty picture, but as a percentage of the population, has not been very much. So you have countries where they hardly did anything. Our province had amongst, if not the longest lockdowns in the world. But part of it was, and here we go into measurement again, was because we didn't have the capabilities for all of the people going to the ICUs.
Right.
So it's a different thing than how dangerous is COVID. How many people go and they can't get treated well as compared to how many people get it and are completely debilitated or die from it. So measurement tools or something. And you have to remember there's 2 major groups that, I'm not saying they like COVID, but in some ways it's in their interests. The pharmaceutical companies have been making a gazillion dollars from this. Yes, I'm exaggerating, but they've been making a fortune from COVID. And I think in many ways they want to see the variants. I mean, that sounds very inhumane, but I think it's true to a degree. And then for the media, it's been fantastic getting people to follow it. So you've got these perhaps are almost opposing forces to what COVID is actually doing. There you go. There's my brief summation for whatever it's worth.
Yeah, that is an interesting take, and you're right. It's been all about protecting the public health services because of the amount of investment in ICU beds and the like. And arguably, if there was more of an investment in those facilities, then these lockdowns and some of these measures would not have been as necessary.
I owned one company which I've since sold called Alpha Pro Tech, APT in the States. And they do protection, be it masks or gowns, etc. And every time there's a major scare, be it SARS, Ebola, COVID, that stock price skyrocketed, absolutely skyrocketed. So for shareholders like me and other people, it was a fabulous way to make money. And I knew that I just had to wait for the next scare. I didn't know what it would be, when it would be, but I knew another scare would arrive. And of course it did. And if you decide you want to look at an interesting chart, take a look at APT and you'll see it's just like it's spiky, spiky, spiky. And it's been the same pattern. Maybe it's 2 decades. So once people forget about the latest major problem, the stock price goes way down, and then you can pick up some shares and you buy it, and then it goes crazy. It's fascinating. It's also a way of investing.
Yeah, we'll get into some of that, your investment philosophy, because I think you touched on that there. But before we even do that, it would be really useful to provide for my listeners a little bit of background as to yourself, how you got into investing. And your profile says you've been investing since the 1970s and you've made some phenomenal returns. I mean, your track record is quite impressive. And, we're talking about over decades, which this is not driven by luck, you could say, right? Like there's some principles that you've been able to apply that seem to have quite a lot of validity. Before we get into your philosophy, though, how did you get into the world of investing?
Well, first I'll just address the returns. Short-term, long-term. Last year we're up 41%, but 10 years the annualized is 19.1, 20 years it's 17.2. So it's amongst the best out there, and that's why we have a lot of subscribers, and we're very proud of that. But I'll also say we do lose money sometimes. But how did I get involved in it? I think part of the key was when I was very young, I was always very interested in making money. And I think, quite frankly, I was overly possessed by a desire to make money. Why that is, I can't really say, but it's just something that was really a part of the DNA of Benj Gallander. So when I was a teenager, a friend of mine named Elliot, he's actually in one of my best-selling books, he became a stockbroker. So I would go down to the firm where he worked called Yorkton Securities, and I could do research because I could look at value line. So we're going back literally 45 years. And Ben, that kind of scares me that I can talk like that and say I've been doing this for 45 years. But I would go down there and I'd sit with them. And, at that point, the ticker went by. I would go in the back room. I'd look at this incredibly valuable resource that Value Line was. And I would look at stocks and see how they've been doing for 10 years. Elliot, he was kind of a young gunslinger. Yorkton was a fascinating place. I think a lot of the people were not necessarily doing what was best so much for their clients as for them, which I learned a lot from watching those guys at work. But, I would go down and it was great. Elliot would always take me to lunch. And I loved a free lunch back then. I still love a free lunch today. And he was one of these guys who I always felt kind of had to prove himself. He would take me for a really nice lunch. And then as the years passed, he would take me for a lunch that was not quite as good and quite as good. Eventually, he ended up taking me to Cultures for like a salad. I was thinking, I don't know if it's worth it anymore. But I learned a lot going down there. And I remember, a bit of a segue being in high school, and I had a teacher, Mr. Richards. He was from South Africa. I don't know if it's true. I'd heard he was a Rhodes Scholar, fascinating gentleman. And our assignment for an upcoming class was to know the stocks on the Toronto Stock Exchange. So I sat down with my dad, and my dad liked investing. He was in the lumber business and in lumber yards, plumbing, but he did invest. He would have me ride my bike down to what we called the village from where I lived so I could pick up the 5-star Toronto Star newspaper. He put out 5 newspapers in the day, and the 5-star had the later stock market results. So I went over every stock listed on the TSX with my dad. And then when I went to class and Mr. Richards was asking the name of the companies, I knew the vast majority of them, whereas the other students didn't. Now, I certainly was not the best student in the class. I did not have the best marks, but on that day, I was a really smart kid and got huge positive feedback. And I sometimes wonder if that is a factor in one of the reasons I really got interested in stocks. So I learned a lot from that. I would go down to Yorkton regularly. I started making my first investments at 19 years old. And of course, the goal was to make money. And it took off from there.
That's fascinating. And when you were describing the positive feedback piece, there was this psychology experiment around teachers who were told these are special kids, and they gave them all sorts of praise, but it was just an experiment. But lo and behold, the kids that were given the praise did better.
Well, I think that's true. And, as I said, I didn't do very well in high school. If I had to get into university today with those marks, quite frankly, I wouldn't have been able to do it.
Well, there's great inflation these days, right? So, right?
Yeah, right now it's about 7.5%. Oh no, that's the other inflation. So I managed to get in. When I did my undergrad at the University of Western Ontario, I did not, quite frankly, do very well at school. What I did do well in, I actually met my business partner there. We've been doing Contra The Herd investment letter for 27 years, but I met him and we bonded over pinball and playing cards and the racetrack. So if I had been graded on my prowess in each of those, at least in terms of pinball and cards to a degree, racetrack not so much, I would have done amazing. But in terms of the actual marks, not so good. And then I took 3 years in between my undergrad and my MBA. And I traveled, I worked in different places, did a lot of different things. But I matured. When I went to university, I was young. It's the same age now, but I was 18 at that stage. I didn't go at 18. But quite frankly, Ben, I was not only physically immature. I went to university, I was 5'2", 108 pounds. Like I was tiny, no exaggeration. And mentally, I was about the same in many ways. I was a nice guy. I like to think I was a really nice guy, but very, very immature on so many levels. But then I took 3 years in between my undergrad and grad school. And in those 3 years between traveling and working, etc., I grew up a lot. And I was very lucky, I think, to get into MBA. It wasn't based on my marks at Western. I did write an excellent GMAT, and I think that was the key. And over time, so now I was about 23 years old, I became a much more motivated student. And here, I think it's a fascinating story. My parents, it might just be a personal story, but my parents paid for my undergrad, which is very kind of them. And my mom said, we'll pay for graduate school. And I said, Mom, you didn't get value out of what you already
Right.
paid. I will pay for graduate school myself. And I did, and I'd worked again, and I did a little work when I was at Dalhousie University in Halifax. And I was lucky enough that one of my professors, a guy named Alan Rugman, may he rest in peace, he asked me to do bursary work under him.
Okay.
And I think part of it was, because even then I was a contrarian, I thought differently. I think he wanted a guy who thought differently. So he asked me to write a case, and the case he asked me to write on dealt with his research and way of thinking. And he had some theories called internalization and firm-specific advantage, which is basically that if a company knows something that others don't, they have an advantage. I mean, that's it in a nutshell. And he had written some books, and I mean, we had to buy it. I don't know if you could see me. The book was tiny, and we had to pay, I don't know, $30, $40 for this tiny book that he had written. And when he asked me to do the work, I said, sure, I'm happy to do it. So I wrote a case based on what he wanted, but then I disagreed with his conclusions. So this is a problem, man. When you're writing for a professor and you disagree with their conclusion, some might say, well, this is good. Why do you disagree? Let me explore this further. Well, Dr. Rugman wasn't so pleased. So I ended up in his office. I'd given him the paper. And we also agreed that not only was I getting paid for this, but I was going to write one less paper. And he was very mild-mannered, and I liked the guy. But he started yelling at me.
Wow.
And he took the paper and he threw it in the garbage and said, this is garbage and that's where it's going. It was a huge gesture. And another professor who I never had, Cecil Dipchad, was going by and the door was open to crack. And he looked in and he said, is everything all right? And Alan Rugman said, yeah, no, everything's fine. And I said, well, I've done what we agreed to. And one of the things was I wrote it, the case is a play.
Okay.
And, you know, cases are very dry.
Sure.
In MBA. So I decided to do something that had more pizzazz.
Sure.
I don't know if I've ever used the word pizzazz before, but it had pizzazz. And I don't know that he appreciated it, but I thought it'd be great as a student to read something that was more exciting. Anyhow, you had to get B- or better to pass the courses. I passed every course. This was my last one. But I was afraid. I remember going out with my buddy Darryl Brown that night and to a party. And it was a party of women I met not so far from you. We met traveling in Scotland. And at the party, I was in the corner. I may be giving you more information you want to know, but
No.
I'm in the corner with Darryl saying, Alan, he may fail me. That means I'd have to stay here for the summer. I wanted to go back to Toronto. I don't want to have to stay for the summer. And Kathy, she had a bunch of her friends there. She looked at the two of us huddled in the corner and she said, Benji, you used to be so much fun when we traveled together in Scotland, which implied, of course, that I wasn't fun. Because I was living in a certain amount of fear. Now, as it turned out, I ended up getting a B or something along that line, minus B plus. It all worked out. And one of the kickers of the story is about a year later, Alan wrote me and he said he had written a paper and he wondered if I would be kind enough to take the time to go through it and give some feedback. So I guess he got over it. And I believe that I actually did. Long time ago.
Oh, I love that story. There's so much good stuff in it. There's so much. There's certainly a lesson in fear, and we talk about fear a lot on this show. You can't have risk and uncertainty without it. So it seems to come up time and again, and so what I'm taking away from that is that you I don't know if it got over is the right way of describing it, got over fear or learned to befriend it or whatever. But I'm just wondering how you view fear in investing, but I'm sure there are implications and lessons beyond.
Well, I think it's fair to say when I was a kid, I was a very fearful kid.
Mm-hmm.
I was afraid of so many things. And I don't know, they always talk about environmental factors versus genetic factors. I believe in both. What the division is, I don't know exactly. But I certainly had a genetic predisposition to be fearful.
Mm-hmm.
I remember being 9 years old and 8 years old, at day camp, and the guys were all going for a sleepover at what was called the rainy day. And I just didn't want to go.
Mm-hmm.
So I remember the guys were coming around a corner, and I hid in the bushes so they wouldn't see me.
Okay.
But I was very fearful of many things growing up. And it's who I was. And I did have to learn to overcome it. And I think I learned to overcome a lot of it when I was 22 years old. And I went to the east coast of Canada and just hitchhiked through for 5 weeks. And of course, when you're hitchhiking through, you never know exactly where you'll end up. I didn't have a tent. I would camp out a lot. You never know who's going to pick you up, what might happen. And I decided to expand my horizons a few years after that in my late 20s. There's a trail in Ontario called the Bruce Trail. And it runs from Niagara on the lake near Niagara Falls that most people know, up to Tobermory, up in northern Ontario, well, somewhat new. So 750K, and I went and hiked it in 30 days on my own.
Nice.
Although my business partner did join me for a couple days. I also went without a tent. Not necessarily the best things, but I knew there'd be some kitchen shelters. I did stay in 4 or 5 bed and breakfasts along the way, but I was out on my own all the time. I started doing it at the end of April for the next month, so very few people on the trail except on the weekends. And I did have to fight my fear, especially I would hear things like, the bears, they're coming out now and they're hungry. And I would hear about the nests of rattlesnakes. And I had this little kit. So if I got bit by a rattlesnake, I could pump
right.
out of my leg. This was not something that I wanted to do. But I think to overcome my fears to some degree, I went the other way. In England, Ireland, Scotland, and Wales, over the course of 4 or 5 trips, over about 6 months, I hitchhiked through most of those countries. And some of the work I've taken on over the years. So, I'm at a stage now in life. Sometimes I still have fears, but not much. I have far less time ahead of me than behind me. I do pretty much what I want. But Ben, it really was, I feel like I'm doing a psychological analysis of Benj Gallander here. It was really something that I had to learn to overcome. Yeah. And I think I did it pretty well by putting myself out there and doing things that I wasn't comfortable with. And I think it's a life lesson in many ways. What do you want to do? What do you want to try? What's on your bucket list? What takes you out of your comfort zone, but still makes sense? And I still have many things that I want to do. The impediments now, again, it is a bit of a psychological thing. Because I'm older now, I'm going to be a senior citizen before too long. The impediments going forward will be more physical than anything else. Maybe mental, hopefully not too much. And literally on Monday night, I played basketball with a bunch of guys I played with for well over a decade. But we had not played together for 2 years because of the pandemic. Sure. So I'm the oldest of the guys there. I'm certainly in the bottom third of all the guys playing. How low in the bottom third is another question. But I was concerned going into it, like how my body would react because I hadn't been doing enough exercise. Did okay. But part of the thing is put yourself out there, challenge yourself, recognize you have to keep on building up. And risk is, which is what you're about, and I guess me to a degree, risk and reward is absolutely critical. And I think if we stop taking a certain amount of risk, I'm not saying we die, but life loses a lot of its richness.
Mm-hmm.
Make sense, sir?
It makes total. Like I'm there. I'm right with you. This is great stuff. And I also, courage is doing something in spite of the fear, right? So we all have, fear is just kind of a human thing, right? So regardless of whatever we're trying to do, fears come up. I think for most people, when you develop a pattern of dealing with it, it's easier to push through it. But that's the definition of courage is acknowledge the fear and go ahead and try something. And knowing that, like in investing, you could make a really good decision based on all of we'll talk about your investment philosophy in a moment, but based on all of your learned lessons of investing. And still, I'm looking at your returns, right? So I'm looking at 2018 and I'm like, what happened in 2018, right? You can make it says here, it was minus 11.9%, but you could make the right call. Things still don't go your way, but that's what courage is about to me, that you acknowledge fears, knowing that there's always some downside, but you push through anyway.
Yeah, and I think facing those fears and learning from them and dealing with them is important. And in terms of the investing, and I mean, we've had some bad years, sometimes caused by the markets themselves.
Yeah.
Plus, when I was on the business news network, Bloomberg here, since pretty much the beginning for about 20 years. And I would hear feedback from people and they'd say, why do you spend so much time talking about your losers? And you've got, one of the best track records out there. And I'd say, well, those are the ones you learn the most from.
Mm-hmm.
You do learn from your big winners. How can we recreate that? But you do learn a lot from the losers. In life, in terms of fears and overcoming them, I don't know if that, when you overcome them, if it makes the hills smaller going forward to some degree. I can't say, but it does, as mentioned before, it adds to the richness of life. But it's fascinating because some of those people on those shows or on CNBC, it sounds like they never make mistakes. And of course, anybody who's been investing for any amount of time will make mistakes. And I have no problems acknowledging them now. If I go back to when Ben and myself and another guy, Joe, we roomed together at Western. At that point in time, when I was 19, 20 years old, I hated admitting mistakes. Mm-hmm. I would argue until I was almost literally blue in the face that I wasn't wrong. And I lived with two other guys who were pretty much the same. Now, I learned over time that it was easier to admit mistakes. And then sometimes, quite frankly, if I'm in a debate with someone and they become so vociferous that it's all getting very uncomfortable and perhaps endangers a friendship or something, or the debate itself is relatively pointless. And this may be wrong what I'm going to say, but sometimes I'll say, yeah, I guess I'm wrong. Now, I may know to really virtually 100% that I am right, but it's simply not worthwhile to win it.
Right.
And it's almost like knowing when it is worthwhile to lose, even though you should win. And there's only so many things in this world that are really important. There's a lot of things that we consider important that really aren't important. I mean, we see it now, of course, with Russia and Ukraine. We saw it with COVID and what people had to face. We see it in terms of poverty and, people who can't do well at all. There are things that are very, very important, but there's a lot of things that people consider to be important that really aren't at all. The extra pair of shoes, this, that. There's things that are enhancers to life, but as a matter of real importance, at least from my perspective, they're not. But to somebody else, they'll say, oh, yes, those shoes are what life is all about. I don't know. You can't see that I'm wearing a pair of high-top Converse, and I've been wearing them off and on for the past, not this particular pair, but since I was a teenager.
Right.
And they're comfortable. They used to be my basketball shoes.
Right. I was going to ask.
Yeah. Wear better ones. Yeah.
Right. No, that's lots of great stuff in here. And I do want to talk a little bit about, I mentioned your investment philosophy, and some of the things that I can see here are, well, let's talk about, the first one is you're interested in things that are due for a turnaround, but that are unpopular. How did you develop this? Is it just a list of things over time as you possibly made some mistakes or learned through doing? Or did you sit down and after many years, or how did this come about? How did your philosophy come about?
Yeah, it certainly developed over time. There's no question about that. And it began with my first investments and doing an awful lot of reading. So I read tons. And I read tons back then, all kinds of different investing books. So, I remember my first investments were in Inco, huge mining company, and Liberian Iron Ore, and both of them have been very badly beaten down. And, over time, things changed in terms of what am I doing wrong? What am I doing right? What can I learn from this? How can I apply things? So I was always a contrarian thinker. Sometimes I think maybe it's because I have 3 older sisters, and to survive to a degree, I'm exaggerating, of course, I had to think differently. But again, going back to what I alluded to before, heredity and the way the mind works, I always just kind of looked at things differently. So I started making my first investments, and with Inco, part of it was the miners were on strike. And I thought, wow, this strike is going to end. I don't know when it's going to end, but at some point it's going to end. So if I buy now while the stock's out of favor, when the strike ends, the stock will likely recover, which it did do. So it's been, you learn over time. I don't know if this is one of the best-selling books I wrote. Can you see that on the screen?
I can see your title, your name on the title, The Contrarian Investors 13.
Yeah. And the reason it's called that is because there's 13 rules in the book that I follow. And I've written three bestsellers. People can order it from our website at contratheherd.com. And one of the books is about investing in baseball, because I always loved baseball.
Sure.
So I use baseball for a lot of metaphors. 7th game of the World Series between the Toronto Blue Jays, my home team, and the New York Mets. And I have a lot of my friends and family members in the book, because I can use any characters that I want. So that book was basically a story with investing at its base. My book, the How to Start and Operate a Small Business, was factual how to do it. This book, The Contrarian Investors 13, it much more focuses on rules and different methodologies, not just mine. And when I say mine, what I did was I combined a lot of different methodologies, and that was critical. So yes, I'm looking at turnaround situations, as you alluded to before. I'm looking at stocks that are out of favor. And it's so much easier to do research now. When I started, I used to sit down with the Globe and Mail, Canada's national newspaper that I write for, and I would have to go through the stock market listings line by line. And I would look for stocks that were down at least 33% in the past 52 weeks, and I'd mark them down, go through the list. Then I would type up a little letter, pop it in an envelope, pop it in the mail, ask for the last 4 annual reports. They would come in the mail, and do the research that way. And I would build up filing cabinets of books. And so that's how it kind of got started. Of course, now you just throw it into a screen. And stock's down to 33%.
Yeah. I just want to double click on that for a moment, because I think that there's something to be said there for working with the material, right? So in other words, like, I always take paper notes. I've always got a pen in my hand, and I find I retain information better. And I'm just a hypothesis, but I think quite possibly that as you went through the sort of Globe and Mail line by line, and then writing those letters, and you just got a structure already for your thought process that may have helped you in a way that perhaps wouldn't help someone clicking through a screen or numbers of screens.
I think that's true. And so I didn't mean to cut you off, but yeah, in terms of actually writing things down, and making notes. I'm listening to an audiobook now, nothing to do with investing, comedian David Sedaris. And he was talking about walking around and making notes all the time on people he meets and things. I used to do more of it, and I think I have to get back to it, and I think I will. And I thank you for kind of reminding me of that. But it's different when you actually do it, when you take the time, when you mark things down. If you're constantly jumping from screen to screen, you may get a fair bit of information, but how much you retain is another thing. What I would do, and I still do to a degree, before I would actually buy a company, and we don't buy into many companies, I'd end up lying on the couch, going over the old annual reports and going over them more in depth. Say Phil, who works with us, he goes over the 10Ks more closely. I think Ben does too. But there are different ways of getting knowledge. And I think your way makes a lot of sense. And when I find a company, so to speak, I won't buy into a company for at least 6 months.
Okay.
Often 3, 4, 5 years. So over time, I'll be getting more information about the company. And then what sometimes happens is that, the company isn't doing well. I'm looking at companies that aren't doing well, their turnarounds possibly. And then there'll be a certain piece of information that comes out that for most people it might not seem like much, but to me it says, okay, now we're getting there, and now we're there. So the stock price is still beaten down. They have done this latest thing. This is really going to help revenues, the bottom line, or whatever. Now's the time to invest. But I'm very patient. And, a lot of times, one interviewer in particular, a guy, Mark Bunting, he would regularly ask me how I could be so patient. And it is much harder to be patient today than it used to be. And the reason for that, to my way of thinking, is technology. People are constantly with their iPhones. People are constantly getting stuff from the internet. People are constantly with getting information from other technological sources. And it's coming at you all the time. Now, I sometimes take flack because my cell phone lives in the glove compartment of my car. I might use it a dozen times a year, maybe a little more, but I don't use it much. And some people say, well, you're hard to get a hold of, but I'm not.
Right.
Because I'm on the computer here a fair bit. If it's something important, I can phone somebody. But we just get too much information. Lately, I've noticed, and maybe it's because I've been sick and the weather's been horrible here, I haven't been out as much. So I'm watching too many things in too close a time frame. So the time frame starts to get warped. And one thinks that things are happening more or aren't happening because you keep looking at it. Whereas it would be better to take a step or two or three or four back and get it from more of a distance. So it's interesting. My guess is, and I'm generalizing, that the younger generation, they're way more tapped into the technology. So they're getting information, and so much of it, and so quickly, that can actually be counterproductive.
Sure.
So they're missing a certain big picture over time because they're so involved in the small picture and the minutiae.
Minutia,
How do you
yeah.
say that? Minutia than they should be. Good. I'm trying out a new word. I don't know how many people are going to see me garble the word, but hey, there you go.
You make some really profound points, because I think things need to soak, and we don't have enough soak time, right? So when you're taking in some information, the subconscious mind is kind of working with it and playing with it, but you need slow, sometimes deliberate, just thinking, and then, as you say, taking a step away from it. And I venture to guess that that's really helped you a lot in your success in coming up with some, putting some structure around your thinking and then putting that into practice. And I think you're right. I notice it myself. I'm around my phone way too much, and I'm far too distracted, much more than I think I remember myself to be in the 90s, for instance, or even in the 2000s. And I want to get back to that, but it's a struggle. There's so much stimulus.
Yeah, it can be very hard to disconnect.
Yeah.
And there's all kinds of studies. I have two kids, and what it does to kids' brains. And I mean, there's an addiction there. There's no question. But the addiction isn't just for kids. The addiction is for adults. I mean, you walk down the street and you see people walking, their cell phone, etc. There's two people in a restaurant together. Supposedly, they're having 4 conversations. But there's a tremendous addictive quality. My cell phone it's not actually that old, but doesn't have all the bells and whistles, and I don't use them. I've only sent one tweet, and I just see, and I'm surrounded by people who are tweeting all the time. And I think this is a fabulous capability.
Right.
It's absolutely wonderful, wonderful technology. So I'm not talking it down, but what I would be a bit afraid of for myself is that I would end up doing it too much. I go on walks virtually every day. They're not necessarily long. It could be 20 minutes or so. But I do hear the birds. I do see things. The odd time I end up singing and hoping nobody hears me. And there's a tremendous value in allowing the mind to go in its own direction. And I think there's an evolution, one might call, that happens there, which cannot happen to the same degree if one is constantly bombarded with stimuli. And I'm not saying people shouldn't do it. This is the way of the world. And of course, I remember hearing years ago, Steve Jobs didn't want his kids to have cell phones.
Right.
I think there's a lot of people who don't, and they want their kids to have them later. It can be very difficult to stop kids from getting them to a degree because all their friends have them. But I think it's very important that adults and kids step back to a degree, just in terms of living a quality of life and also in terms of investing.
Yeah, I think it's harder and harder, but I agree that taking some time away, or having a philosophy or a way of working with the stuff, that these are tools, and tools can be abuse, right? That helps a lot, but we're not really taught. These things are so new, right? We didn't have a lot of this stuff 10, 15 years ago, and we're kind of catching up. I guess we'll see as a species, but we're not wired in the way in which this stuff works. And there is something about the way in which these algorithms work, and because it's all about eyeballs on screens. So they've worked out ways to get you back to the screen I think there's a dopamine hit whenever you have one of those alerts, right? In any social media app, and you see you've got 3 alerts, you want to click on it. It stimulates something, and we haven't really figured out how to manage it. Junk food for the mind.
That's good.
So
is it dopamine?
I think it's
dopamine that it does.
I think it's dopamine. I think when you get an alert, something triggers in your mind. Oh, I better check what could it be? And there's we haven't figured out how to deal with that. It's kind of like all the sugary snacks and things that, we're not going to get rid of it. And some of it from time to time tastes good, but you can't have it in excess, or else you really do start to break down. And I think we're seeing that in the younger generation. But I do notice myself, I'm more distracted than I used to be. It's very, very difficult to stay focused on a task.
Yeah, and again, as you alluded to, part of it is they want the eyeballs.
Yeah.
If they get the eyeballs, they make the money. And, the importance of money in our society cannot be underestimated. And I think, actually, I finished my first stock market book, the baseball one. It finishes with money often costs too much.
Okay.
So money is important. And I have no problem saying that money is important. To put a roof over your head, to buy food, to enjoy things. Sometimes I say, and this is horribly cynical, some people might say, I think money can buy love.
Okay.
And I mean that in the sense of, so you want to go out with somebody, but if you've got no money, sure, you can go on a walk or do this or do that. But if you can take her or him to that concert, this person who might not be willing to go out with you will say, yeah, I want to go. Yeah. So, money can buy the time to buy love. And I don't see that as being necessarily cynical. But when I finished the book with Money Often Costs Too Much, as I said, when I was young, I was very, very focused on it. I'm not so much focused on it now because I'm very fortunate. We have really what we need. But, to satisfy those hierarchies versus Maslow or something, money is a big help.
It's necessary, yeah. Yeah.
It's necessary. It can become a necessary evil, or it can become good. And right now, again, going back to the Ukraine, we're seeing people doing incredible things, helping other people and supporting other people. But then what's the war about? I would say a lot of the war is about resources and having more geography. So, there's a goodness to humankind and an evil to humankind. What will win in the long run? I don't know. Will it ever really change? I don't know. But when you come up with those answers, if you could keep me informed, I'd appreciate it.
All right. Yeah. Could we talk a little bit about Contra the Herd and the origin story of this thing? And I'm assuming that you didn't think it would, well, maybe you did think this is going to be almost a multi-generational thing, right? But can you tell me a little bit about how that started and how it works, and why, for example, you cap your subscriber list to 1,000 and all that good stuff? But maybe start at the beginning.
Well, Ben and I met, as I mentioned, in Western, and we met in the mid 70s. We became hard, fast friends. And we talked about doing all kinds of different businesses, from growing Christmas trees, which was easy, to doing this, to doing that. And I think he got interested in investing maybe partially because of me. And we talked over a number of years about maybe doing an investment letter. And then 27 years ago, we put together our first issue of 4 pages. I look at it and think, oh my God, is that horrible? We did the design ourselves.
Right.
We have no design skills. A gentleman who I dealt with at the TD Bank at that point in time, he knew me reasonably well. He said, well, if you're doing this, I'm going to subscribe. So he was number one. And then we had nobody. We weren't advertising. We weren't spending money. We each put in, I think it was $500 to start. And then about a year later, there was an article on us, on me, in a small newspaper. Mm-hmm. And a guy named Avi called. And I was in our old house. It was pretty small, in my home office. And Avi said, I hear you only take 1,000 subscribers. Do you have any space? And we had one. So I said, oh, just wait a second. Let me. Yes. Oh, so sneaky.
Scarcity works, right? Scarcity
works. And I think that was part of the idea in answer to your question, why only 1,000? People wanting to join the club. So Avi got in. He doubled our subscription base. And then the National Post had a huge article about me and my success. The Globe had an article, getting on BNN Bloomberg, as I mentioned. So all of a sudden, we started to have a big following. And we continued to follow the patterns of our basic tenets of how we would operate the business, the principles to invest. And it worked. A lot of word of mouth helped get us other subscribers. 1,000 people, would we do it now? I don't know if we would, but I like to think we would. People want to join that exclusive club. We've had a lot of success. People in numerous countries have followed us. We haven't had a lot of success, though, in the States. We've got a lot of American subscribers, or some. A lot is an exaggeration. And in terms of American media, I've written for some newspapers there a little bit, but very, very little. And I've done very little in terms of TV there. And I can say that we just haven't been successful doing that. Still may happen. I don't know. We aren't huge in terms of marketing. We don't pay for marketing. For the most part, we're at the odd conference. But I think part of it is both of us are mid-60s. Phil has worked with us for about 10 years. He's early 30s. He's more of a go-getter. Mark's been with us almost 20 years. Lloyd about the same. So we've got a great team that stayed together, and we're very proud of that. People are happy. But we started like that, and we continued to evolve. I mean, we're going to evolve again soon. I mean, right now, every quarter, we send out an issue like this.
Right.
So it's 16 to 20 pages.
So the business model, just sorry to interrupt, but the business model is you don't manage anyone else's money. They subscribe to the newsletter and you publish what you're investing in and the returns and so forth.
Yeah, and then we publish that quarterly. And then whenever we buy or sell a stock, we send an email. And of course, this has all changed. When we started, it was fax machines.
Right.
It wasn't even email. So say, for example, yesterday we sold 2 stocks, and we're not active. That's very unusual. But one had gains of 217%. The other was given to us in a spin-off. So we sent out an email saying, this is what we sold, and our subscribers would know the companies. This is the amount of money we got for it, for them. This is why we still like it, and this is why we don't like it anymore. We do somewhat of the same thing. If we bought a stock today, before markets open tomorrow, we would send out an email saying, this is what we bought, this is the price we paid, here is our initial sell target or range, this is why we like it, and this is why we don't. And one thing we always do when we buy a stock is we set a sell target or sell range. because at that point, our feet are most firmly planted in the ground.
Right.
We don't want to give into the noise because there's always information. So, well, maybe we should sell this now because the Russians have bombed this nuclear generating plant in Ukraine. If that had imploded, that would mean that the price of uranium would go down. That would mean that the price of, say, a company like Cameco would go down. So the question is how much information to take in. But we will send out these releases like right after we buy something, right after we sell something. Again, before markets open the next day. Subscribers then have a choice. If they like it, I think most of them go to discounters and they'll buy it. If they don't like it, they don't. But everything that is in our portfolios, we own. So we actually are putting our money where our mouth is now. In terms of how many stocks do we own in the portfolio that I manage, there's two portfolios, one that Ben Stadelmann and Phil McKellar manage. The one I manage for years has always had between 15 to 25 stocks. I think you can diversify very well with that. Some people will say you can diversify with as little as 6 or 8 stocks. I question it. Some people say you have to hold an index of 60 or 100 stocks. I disagree with that. Ben and Phil in the other portfolio, they normally have 15 to 25, although now they have a bit more, but partially that's because of 2 spin-offs that they received. So it's a balancing act. After the financial crisis in the States, I bought a number of American banks. And one of them was Bank of America that I bought at $6 and change. And I finished selling at 38 and change. I wish I'd have longer, but I didn't. We did fine. But over 35% of the portfolio was American banks. It was 4 banks. So on the one hand, it was overweighted to American banks, but there was still more diversity because there were different ones. It wasn't all in one. So over time, the portfolio cycles to a degree because, say, the company hits the sell targets. We usually sell at least 50% then. It may not be exactly then. For example, if the stock price is hit in November, or December, I don't like selling big winners at the end of the year because it's better to wait till the next year to defer taxes. Plus, also, you can have the Santa Claus rally and the stocks generally go up on average 0.5%, not every year. But I'm looking, every stock I buy, I'm looking at getting a gain of at least 100%, or 200, 300, 400% plus. And none of it's pie in the sky then. All of it's is based on where the stock is traded before. So if I can buy into a company that for 7 of the past 10 years is traded at 200% plus more than I'm paying, if the company returns to old form, then we can make big money. If in the case of one, like I mentioned before, Alpha Pro Tech, if it has one of those spikes, we can make huge money on that. But we don't set any sell targets based on pie in the sky. And in terms of methodology, I only buy companies that have been around for at least 10 years. So what I get then is a tremendous track record. So I can see where the company has been. And it's like, going to the racetrack, which I mentioned before. And you look at what a horse has done in the past, and can it do it again? So there's nothing pie in the sky there. A 10-year track record means a lot, but what it also means is, so say in the late or early 90s, when tech stocks took a big beating, I wasn't buying into the companies. Or late 80s, all these companies that were doing really well, I wasn't buying them because they hadn't been around for 10 years. So for a while, and the nature of money is there's only so much money to go around. Now that's changed over the past 2 years because governments have been flooding the market with money. But even then, finite isn't the right word, but I know you know what I mean. There's only a certain amount. So because people were putting so much money into tech companies, it was not going into our companies. So say what you'll see at the end of the 1990s, we didn't do as well. We did okay,
sure,
but not as well. But then starting in 2001 for 3 years, our smallest gain was 40% in change.
Right.
So we did really well, much better than the markets.
Sir, can I just interrupt there?
Absolutely.
So I'm just thinking about a company that's been around for 10 years or longer, and fads come and go, right? Sexy things happen. And do you ever find yourselves questioning, maybe some of this tech stuff, I don't know, that could be the future, or maybe it's crypto right now. It's very, some things seem very seductive because of the newness, the very short-term returns, maybe even the volatility. And I'm wondering how you deal with that, how you deal with things that seem to be, wow, we might need to be here, or we might need to do that there. Are we missing something? How do you deal with that?
Well, that's a great question. I always miss things.
Okay.
I always miss stocks and I miss sectors. So say about 5 years ago, my handyman asked if his son could come over to my place and talk to me. He saw me on TV. So I said, sure. So he came over and he had just started investing. And he was investing in cryptocurrencies and marijuana stocks, which were very hot at the time. I wasn't in either. And I asked the question, so what's a price earnings ratio? No idea. Do you know how to read a balance sheet? No idea. What's an MER? No idea. He knew nothing. Pretty much nothing. He was making a lot of money though. I mean, it blew up a little bit later on him, but these things happen. So I think I'm okay missing things. And I'm very selective in terms of what I buy. If I buy 5 stocks in a year, that's a big year. But how you do it's not based on what you don't buy and what you miss so much. It's based on what you do buy. So if I can cherry pick and choose 5, and they may not all work out, I have a chance of doing really well. So say last year, a sector that I was buying a lot of was gold. And so say in December, I bought Yamana Gold. And gold companies were starting to do better. The price of gold was going up somewhat. Yamana hadn't done well. But I knew they had 5 mines. And if you looked at the recent record of their 5 mines, it was amazing. They were either at record production or ramping up. Good management, paying a dividend, and I love dividends. As some people have heard me say before, perhaps, dividends allow me to be stupid longer.
Right.
Because if I buy a stock and it doesn't do anything or it goes down, if I'm getting a 2.5% to 3.5% dividend, I'm getting something. Plus, in Canada, we have the dividend tax credit. So money earned on dividends is worth more than money earned on a GIC. So I just know that I'm going to miss most things, and literally miss most things. But the returns are based on what you buy. And, I'll continue to be selective. So people ask me all the time about, because I'll get emails, and, I'll give you my email address. You have it, I know. But for anybody who listens to this, it's GALL, like my last name, at Pathcom, PATHCOM.com. Feel free to email me. People email me about companies all the time. And a lot of them, some I've never heard of, others I haven't looked at. The odd time somebody sends me something and it's actually interesting to me. But some of the people who send me companies know the kind of thing I'm looking at. But that's what investing is all about. It's what you actually buy. And I don't groan about ones that I didn't. For example, the one we sold from the vice president's portfolio yesterday, I had looked at it closely when it was bought over 2 years ago, and I wanted to buy it, but I wanted to buy it at a lower price than Ben and Phil bought it at. So as of yesterday, they were notching their 217% return, and I got zero. Plus they had a dividend. But it's the nature of the beast. And when you've been doing it for a long time, you don't want to become complacent, and you certainly want to move on with technology and keep on going. So, for example, just over a year ago, a company I owned called COS. Maybe you know them. They make audio phones. So I had bought it a couple of years before that at $1 and change. And for 2 years, it did nothing. Like nothing. No dividend, no return on investment, nothing. And then all of a sudden, it became a meme stock. And until that, when BlackBerry became meme stocks, I didn't know what a meme stock was.
Right.
So I studied them to learn what are these things, because I want to stay up now. Costs ended up going up from $1 and change to $127.
Oh.
Now, I wish I had held it the whole way. Unfortunately, I didn't. I made reasonable money, but part of me was a bit upset with myself because I wish I had held at least part of it longer. But that's different than not necessarily buying something. I own it, and I didn't hold it long enough. But again, I generally go with the initial sell targets. The question is what percentage. But this was extreme. BlackBerry jumping from about $10 to over $30. Stock had done nothing, and now it's back, around $10 or so. So I studied memes, which sure, they're still having a bit of an impact, but not the same way. But it's very important to keep learning. And that was technology, and that was people talking. And again, not to get complacent.
Yeah. I have another investing question, and that's about technical analysis. And I spent my early time in my career, I just got so fascinated by reading charts. And I thought I could do that. I thought I could read charts and like you could recognize, there's a, what do they call, cup and saucer pattern or this thing or that thing. And then I was like, this just is kind of bullshit. Like I don't know what I'm seeing. You're looking at these things and you could read almost anything into a chart after a while. And I'm just wondering what your take on this stuff is, this idea of chart reading, that you can kind of detect patterns in stock market graphs. Do you do any of that? Do you think it has validity?
Yeah, so in the Contrarian Investors 13, I discuss all kinds of different methodologies. As I mentioned earlier, the methodology that I use combines a lot of methodology, be it momentum, be it fundamental analysis, technical analysis, insider ownership, management. I mean, I actually go in the book into a point tally system, what I look at, very based on not having too much debt. So I do believe in technical analysis to a degree.
Okay.
So I went out with the Canadian who many people consider to be the dean of technical analysis in Canada. And he contacted me and said, Benj, let's go out. Sure, let's go out. Go for a cup of coffee. So Ron and I sat down, engaging individual. He also has a column in the Globe and Mail like me every week. And we sat and talked about technical analysis. And I said, okay, I get it. I use charts to a degree. I said, what else do you do? So he was trying to basically sell me his system, which is why he wanted to go out with me. So what other methods do you look at? I said, nothing. So you don't do anything else. It's all technical. No. So he said, if people want to look and analyze companies in a different way, then they have to go to other sources. So to me, it's like, I'll use a baseball metaphor. It's like a baseball team that just has home run hitters, but they strike out a lot, and they can't play defense. They don't look at good pitching. You can't build a team on one facet. You can try. It's just generally not going to go really well. So I think the technical analysis has a lot of validity, but I wouldn't put all of my thinking looking at that and focusing on that completely. So I do like it. When I'm looking at where stocks have been, there's certain patterns that sometimes do take hold. I have a certain understanding of it. And I think there is validity, but I think to be more complete, one has to have a broader system.
Right. Okay. Thank you for that. Conscious of time, I'm
good to go. I'm really enjoying this, Ben.
Okay.
Thanks,
No,
man.
great. Likewise, I'm really enjoying this. So there, a few other things I wanted to actually quite a lot, but just a few nuggets and areas. And one of them is around cryptocurrency and what your view on this stuff is. I'm still perplexed by it. Like I've had two kind of specialists about it, and I studied economics, right? And it doesn't, cryptocurrency doesn't meet the kind of three conditions of what a currency actually is. So I'm like, well, what is this stuff? And I still don't know, but maybe I'm wrong. So, I put a little bit aside in it, not much, but just the amount that I think I might be wrong. And it's actually not doing all that well right now. But I don't understand it. And I'm just wondering what you make of it.
Well, Warren Buffett and Charlie Munger, they're both pretty good investors.
Sure.
They both poo-pawed them. Although recently, Warren's company did put a lot of money into a related cryptocurrency. 3, 4, 5 years ago, I was on a show called On the Money with Peter Armstrong, which was, I would go on, I'd have 5 minutes, they'd give me 3 topics. It could be Bombardier, it could be stock exchanges in general, but often it was about cryptocurrencies and marijuana stocks because they were very popular. And at that point in time, I learned a lot about them. And this was still much earlier days. So I think that they have value and they will have value. Now, value, price is what you pay, value is what you get, that old expression. They will have the value that people put on them. And that value is expanding. Mm-hmm. I mean, we have a country like El Salvador taking it on. We have some companies accepting crypto. We have people fleeing Russia now, converting to crypto.
Sure.
So it therefore becomes, a safe haven. And I'm not saying it's really a safe haven, but gold I don't think is a safe haven either. So the question is, what value do people place on them? And I think as an alternative, they make a lot of sense. And I've taken certain hits from people saying, no, I completely disagree with you. Mm-hmm. But if enough people buy them, that gives them value. So my 21-year-old over the past couple of years has started investing. I actually bribed him. I gave him $5 a chapter to read my book. And then I got to ask him 3 questions on each chapter. So he made $65 and he learned a lot, and he's bought into 11 cryptocurrencies. I'm not saying a lot of money, but he has. And I've used him a little bit to educate me. And it's like gold. There's gold companies that are very solid, long-time producers, many mines. And there's others that are complete speculations that people want to sell you and basically take your money. Mm-hmm. And I think that's the same with cryptos. I haven't invested in any, although I've been thinking that I might want to diversify, buy 4 or 5, not put a lot of money in, dip my toes. And that's what I'll do when I'm going into something I really don't know anything about. But there is value there. I think the value will increase over time. That doesn't necessarily mean that Bitcoin will go up, but the overall value of the market will likely increase. But people can also get burned really easily. We know a lot of thieves operate in this sphere. We know some of the cryptos, all of a sudden they disappeared, dissolved into thin air, so to speak. So that means you've got an investment of 10,000 or 100,000, whatever it is, and you can't touch it. So one has to be wary, and they have to think there's very much the Wild West here. So, there's that old expression too, invest so that you can sleep at night. People who put too much money in any stocks, people who would put too much money in any cryptos, I think it's a huge mistake. What I've done over time is diversified, but one of my chapters in the book is called The Danger of Over-Diversification. And people often don't think of that. If you put money in so many areas, they work against each other.
Right.
So it becomes counterproductive. So I think they're here to stay. I get asked about them quite a lot. I will know more about them. And again, I've talked about them on TV numerous times, but in terms of what I consider to be true knowledge, I will know more about them when I actually finally put some money into them. Because once I do that, it's like when I buy into a company, I may know the company very well, but once I've actually invested, I seem to take on another level of knowledge. And that's very, very important. So yes, I think it's worthwhile diversifying into them. One has to clearly recognize the dangers.
That makes sense. What mistake taught you the most? Or if you could think of one or two that really,
Sure.
Those.
I'm going to get a stock certificate for you.
Sure.
Again, I'm not sure how well you can see it.
Northland Bank.
Northland Bank. It's a beautiful certificate.
Nicely framed.
When I was in my 20s. And not only did I buy into it, I averaged down 3 times.
Okay.
And on the one hand, my thinking was somewhat intelligent. A Canadian bank had not gone bankrupt since the 1920s. So call it 80 years for simplicity. So I thought, well, they can't go bankrupt. The government won't let them go bankrupt. Plain and simple. And guess what, Ben?
They went bankrupt.
One day the government cut the cord. I blew, as a percentage of the money I had, way too much money. The stock certificate sits in my office, a beautiful frame. I don't know. It's a gold frame, not real gold, but it's a gold color. From that, I learned don't average down more than once. Never fall in love with a stock. A stock isn't going to love you back. The bank had not been around for 10 years. Now the companies have to be around for 10 years. So, and those are major rules for me in terms of averaging down and reinvesting in companies buying that are less than 10 years old. So it was a costly lesson, but it was. I wish I hadn't learned it in that way, but that is the way that it goes. So that was big for me. There's been a lot of other lessons that I've learned over the years. Patience is one, because I've got the 6-month rule and I won't buy into anything before it's been around, before I've followed it for the 6 months.
Okay.
That means I'm not going to spot something today and just jump in. I rarely get the best price when I buy things. Most of the time when I sell things, the price keeps on going up. But that's the nature of it. The question is, how do you do at the end of the day? And I think I'm far smarter now in terms of investing than I used to be. But that Northland Bank was big for me in terms of learning what to do. Another thing, and again, I talked about it a bit, I still read a lot, whether it is about investing or other things. Reading is so good for the mind. Reading other people in terms of their investing is great. I have a little Twitter account at Benj Contra, if anybody wants to go there. And Monish, who's an excellent investor out of the States, he comes here every year for the Fairfax meeting. For those who don't know Fairfax, it's not the Canadian equivalent of Berkshire Hathaway, but it's our smaller equivalent. I've actually spoken at one of their dinners, and Monish comes every year. Every year he sends me a book by some other author. And I noticed on Twitter, he had a letter from that guy, Warren Buffett, saying what a great person and great investor he was. And that was very cool. So I wrote it. I know Monish. We have sat down and we talked about things. And again, he's kind enough to send me a book. So if you can sit down with other people who know a lot, or sit down with people and just bounce ideas off of them before you buy a stock, I know how fallible I am. And I think it's very important for people to recognize how fallible they are and to gather information from different sources before they buy in. At the back of the Contrarian Investors 13, I have a bibliography of all kinds of investing books and other books. One of the book that maybe made the deepest impression of me was Walden by Henry David Thoreau, which there is a certain amount about life and I guess investing and how to live. It's fascinating. But in the back of that book, I give examples of other books that I would find fascinating to read. And Kaylin, my 21-year-old, keeps asking, what should I read now? What should I read now, Dad? So I gave him a Charlie Munger book that I had here. I've suggested he read the book, Where Are All the Customers' Yachts?
Okay.
Do you know that?
No, I don't.
It's like the 1920s or 30s. And it's a great book because, like, who's making the money?
Just kind of show me the money. Yeah.
That's right. Show me the money.
Right.
And one thing I learned more so, or relearned from 2008, was to be cynical.
Right.
So I do not want to live as a cynical person.
Right.
I consider myself to be an optimistic realist. But when looking to buy a stock, I think it's very, very important to wear the cynicism hat. And that will add additional clarity when you make the investment decision. Because there's a lot of people out there, again, and I'm being a bit repetitive, who want to sell you a bill of goods, and you have to watch for that. And
I was just going to jump in with, it's easy to want to buy into a good story. And I think we're wired that way. And that's probably an area where we are fallible. And I think also in the startup world, startup founders, one of the things that they are really big on is what's your hero's journey, your story that you go out and tell the market. And it's very compelling when you hear a really good story.
Yeah, and years ago, I looked at the track record of IPOs.
Okay.
And the first year, they were horrible, as a general rule. So, if you get in right away and it jumps, maybe you can get out and make money. But the vast majority, 10 months down the road, they're going to be down in value. What are the people selling? They can be selling a good product or a good service, but often they're selling hype. And I've seen enough dog and pony shows over time. People come and they present what is effectively crap to you because they want you to buy it. Because if you buy it, they'll make money. So being cynical is great. And because, again, if you wait to buy something after you've seen it for a while, sometimes things come out in the wash. And what are people buying? What do people talk about? When marijuana companies were hot, everybody was talking about them. It's the old thing where you get the tip from the taxi driver.
Yeah.
With cryptos, it's the same thing. And people give me tips all the time.
Right.
Most of the time, they're not worth anything to me. But you can gather a certain amount of information of where not to invest when so many people are telling you something. And again, you have to be wary.
Yeah, just going back to Walden, I've got that book somewhere, and I haven't read it. I need to, but I picked it off my parents' bookshelf, and I think it'll be one of the things I read again, just as a.
Well, I had told Ben about it early 80s. And he was working in Calgary at that point for Petro-Canada. I went out to visit him for 3 weeks. And then he started to read it while he was going on the bus to and from work.
Okay.
And then after he read a few chapters, he said, this isn't working.
Why am I? Right. Okay. Right.
It's not, you can have bus reading and streetcar reading.
Sure.
But this book wasn't that. He had to sit down and read it. And I read a huge, huge diversity of things. And it's good for my mind. I literally go to the library almost every Tuesday.
Okay.
And I'm taking something back or picking something up. And it's like a ritual for me. And the spectrum of books is very, very wide. And our libraries here, they're fabulous. Mm-hmm. I order the books online. You probably can do it in London. Mm-hmm. I order them. They contact me, and I get them. Now, sometimes the book will have 220 people waiting, and there's 9 copies, which means I won't get it for 6 months or a year. It makes no difference.
Right.
Eventually, I'll get it. But
what are you reading now? What are you reading now that you think is pretty interesting?
I've got, I have the list of what I'm reading right now in terms of the value for other people. There's a few things that'll give you an idea of the diversity. Yeah. Actually, I'll show you right here what I got. So here's one called How to Decide.
I had Annie Duke on the show last year.
Oh, okay.
Yeah, she's great.
I haven't started it yet.
Yeah. You might like her first book, Thinking in Bets, a little better. Okay. But they're both great, and she is fabulous. She is awesome. I'm a huge fan of hers.
So I'm curious actually too to see what I've been reading exactly this year.
Right.
So very Canadian. The first one is the Down Goes Brown History of the NHL.
Okay.
Really great. Then I did Sylvia Plath. It's just a book of her drawings. So it's easy, but I really try to, look at the artwork. I have no skill in that area. And then I got Gary Paulson for people with kids. He's written some fabulous books. So again, they're for teenage, but one's called Dog Song, and it's about Native people and going out and learning out there.
Nice.
Another one of his that I read recently, it's not on this list, I'll have to think about it. A great book, The Spy and the Traitor.
Okay.
So this is about a KGB agent who comes over to the western side. It's wonderful. It's a true story. It also has pictures of the people that I love. Oh, the other Gary Paulson book's The Winter Room. It's about a family in a special room. It's great. Do you know Shel Silverstein?
No.
Great writer, cartoonist. He was big probably in the 70s and the 80s. He wrote something called Where the Sidewalk Ends. It's basically poetry.
Okay.
But it's humorous poetry.
Yeah.
Stephen King, who I'm sure you know.
Yep.
And I was looking to learn more about writing technique and how to write.
Okay.
So I read his book on writing.
Yep.
Which is his story. I learned a lot about him, how he got hit by a car, the recovery process.
Nice.
And it also, I'd like to be a better writer. So I've had a fair bit of success, but I can still learn. A guy named, you probably heard of this guy, Ernest Hemingway.
Oh, yeah. Of course.
So he wrote something called A Movable Feast. It takes place in Paris, and it has some major true people, which is really very, very cool. And I've been to Paris many times. I have a feeling you have too. I lived in France for a year at one point.
Nice, yeah.
Jenna Butler wrote a book called Reverie, A Year of Bees, and she was a beekeeper. And it's all about her and the bees for a year.
Mm-hmm.
And then the last book that I've read this year, The Nickel Boys,
Okay.
which is Colson Whitehead, and it's basically a bunch of black kids who they've cordoned off. They're the bad kids, and the white kids who are bad in like juvie place. So it's all over the map, and
Yeah.
I have a list of books that I want to read too. And one of my favorite things to do is to lie on the couch,
Mm-hmm.
throw an Afghan on myself,
Sure.
and read. Or
Sure.
when the weather here changes, which I think it will again,
Yeah. Go outdoors.
I'll go outside and I'll lie down in the sun. And we just bought some
Nice.
new outdoor furniture, so if you're in the neighborhood,
Nice.
come on
Yeah.
over. And I'll just sit and read. And
Fabulous.
often it ends
Yeah.
up turning into a nap, but
Hey,
it's the nature of life.
Yeah, I've got, so I'm just looking at my desk, so just give you two titles just in case down, on your list. This one is called Failure is Not an Option by Gene Kranz. And
I'm going to mark it down.
it's basically, it's about NASA and mission control from Mercury to Apollo 13 and beyond. But what's interesting is when you're trying to do something that hasn't been done before, how do you tackle the problem? And it's filled with lots of stories. And this one here is more of a textbook, The Science of Social Influence, and both of which were recommended by podcast guests. Science of Social Influence was Stephen Hassan was an expert. He's an expert on cults, and he was in the Moonies. He was in the Moonies and got out, and then he became this. Like, how did this happen? And he's a world-renowned cult expert, and he recommended that one.
Okay.
So anyway, to give you two there to add to your list.
So Failure is Not an Option.
Failure is Not an Option by Gene Kranz.
Mm-hmm.
He was the former flight director at NASA. And The Science of Social Influence. It's edited by Anthony Pratkanis. It's more of a textbook. It's kind of a thing that you dip in and out of, in my view.
Great. Well,
great stuff. Yeah, no, look, we've covered a lot of ground. We didn't even get into Russia and Ukraine too much. I don't really know what things will look like when this will go out in a few weeks' time. It's a fluid situation, but the world has changed. I think in 4 weeks ago, the world changed. I think
it did, and very, very sad, horrific. Our problems here, and I talk specifically us, even to a large degree in Canada, our problems are relatively small. Like, so what are we going to have for dinner tonight here? It's in this household for sure. Except for the fact that 3 of us have had COVID. That's not that serious. We all recover.
Sure.
I cannot imagine what it would be like to have to flee and to live under bombardments. It's scary, the amount of damage that I'll say effectively one individual can do.
When we spoke about 5 weeks ago, just ahead of this, and this was, I think, a few days before the invasion. Obviously, we didn't really know how things were going to pan out, but what was interesting is around that time, Vladimir Putin did I guess it was a meeting of his advisors, and there's a great piece that came out the other day in Der Spiegel, which is the German magazine. You can translate it on Google Translate or whatever browser, but it talks about groupthink. And it's effectively, it's all groupthink really that led Putin into this place. But you wonder, he may double down or triple down, do all the things that you effectively, he's the anti, contrarian investor maybe, or, if you think about some of the things we talked about, speaking to lots of people, not doubling or tripling down, things like this. He's made a number of miscalculations, but the problem is, how far is he willing to go with it?
Yeah, and he has certain, I think they're pretty clear goals in mind.
Mm-hmm.
And, so it's taking longer than he might have expected.
Mm-hmm.
And in the West, we kind of applaud that, which I can understand. But at the same time, I think he's just going to.
You think he'll get there
until some sort of perhaps agreement is reached?
Yeah.
I mean, what is this really costing him?
Mm.
Sure, some Russians are dying. For him, does it matter that these Ukrainians are dying? Vladimir Putin goes to his huge abode, does what he wants. Somebody was saying to me the other day that he's the richest person in the world.
Mm-hmm.
I don't know if that's true or not. I know we don't have to hold a tag day for him. So he's not putting himself out there on the line in any way, shape, or form. Now, as I say that, is it possible that something might end up happening to him because people are turning on him? Possibly. But in the interim, he is causing chaos and horror and deaths. He's impacting millions of people. And it's just so sad that one person can do it. And I'll throw this out there. It's very interesting because in Canada, we don't spend what we're supposed to spend on the military. And now they're ratcheting up in Germany and other countries. And there's that balance. Like how much do you want to spend on the military, and how much gets used and how much is purposeful because it's defensive as compared to not spending? How much do you want countries to have nuclear weapons as a deterrent, or does that just make things worse? And I have my own thoughts. I won't go into it right here. But again, we're at a moment in time, and we have to really try and think it through, both for the short term and the long term. But anytime one person has so much power, and that person can be evil, it's a huge danger. And we also see it from leaders in other major countries in the world too. It's not just Russia. Only what he's doing is the most abhorrent at this point in time.
Yeah, absolutely. Well, look, we've covered an awful lot of ground, and I just want to be conscious of time and respectful of your time. And I've really enjoyed this, Benj. This has been great. And I'm sure that my listeners are going to get a lot out of it. Was there anything that you wanted to mention or cover before we wrap things up?
Not so much. As I mentioned, if anybody wants to contact me, they know how to do it now. Certainly open to questions. I think that, we've got to try and appreciate what we have. And at the same time, we have to help those who need help. That has nothing to do with, it does have to do with investing, but it's a different kind of investing. But appreciation is key. And I think it's great if we all know how finite our lives are, even if you believe in afterlives, and to try and get out of it what you can and help other people get out of it what they can. Yeah.
That's a good way to wrap it up and end the conversation. But this was great. I'll put all those links in the show notes as well. So if anyone is listening, they can click through there and find you that way as well. But Benj, this is great. I love this fabulous conversation. Thank you so much for taking the time to chat.
Well, I appreciate you setting it up, Ben. I'm sure that it's been as worthwhile for me as it has for you. It's been great.
Great. Thank you. All right, I hope you enjoyed that as much as I did. Check out Benj's books and check out the show notes because there is so much good stuff in there. And as I always say, if you enjoyed this episode, please share it. It helps us out an awful lot. Subscribe and don't miss any of our upcoming episodes. We will be back very soon. Until then, and as always, don't forget, risk is life.